Hey guys, hello and welcome back to Green Pips Effects. And on today's video, guys, I'm going to be talking about Wyckoff. Right now, I'm not going to teach Wyckoff in terms of what's a preliminary support or what's a spring, what's a sign of strength, what is a return to an order block, and that kind of shit. No, what I'm basically going to be talking about here is the overall idea of Wyckoff, right? Not just to trade Wyckoff, but what does Wyckoff itself indicate in these markets, right? So let's get into it. So we have a normal idea of price action, right? That price moves in a certain manner that it creates highs and lows over time, whether it's going to be high highs and higher lows in a bullish trend, or lower lows and higher lows in a bearish market. Now, however, right? So assumingly, right, we have a bullish market, right? So we have a bullish market like this, which in turns turns bearish again, and then goes bullish once more, right? And then goes bearish again, and then goes bullish once more, right? Pardon for my drawings, but it is what it is. And then makes the same shit over and over again, right? A shift bullish to bearish and bullish to bearish and bullish to bearish, right? So we have price moving in this kind of manner in the long term, right? If you just switch to the uh, perhaps if we just switch to the line chart here, right? Oops, sorry, the line chart here, then you'll see what I'm talking about, right? So price is constantly moving, bullish, bearish, bullish, bearish, right? Bullish. So this is the overall context that a market is moving in, right? In a normal sense. So now we could put our candlesticks back, and there we are, right? So boom. Okay, so if price is moving like this, then what Wyckoff shows us in this price action here, which is happening, over a long period of time, right? What Wyckoff is showing us in here, right, is not these tiny little moves in here, right? That price is going bearish and then it's going bullish and then it's going bearish. No, what Wyckoff tends to show us is that bigger picture that most of the people are missing in the market, right? So this is a market that's gone bullish, bearish, bullish, bearish, bullish, bearish, bullish, right? But in this overall context here, what are people missing out on, right? So Wyckoff comes to show us that this overall scenario here, right, this whole charade here is pretty much a market building its context, right? So we have a low, right, that forms a high, which in turn forms a low, and then that low forms a high, right, which comes in and forms a higher low, and then comes in and forms a high, a higher low, and a high. So what Wyckoff really shows us is this bigger picture that most of the people are missing out on, that we're in a context of a very bullish market, regardless these shifts of bullish, bearish, bullish, bearish, right? Bullish, bearish, right? Regardless these shifts, right? The overall structure, what price is screaming to us, that is that, hey, you know what? I'm bullish and I'm gonna remain bullish for a long period of time. This is what most of the people have been missing out on. Most of these XSX USD pairs. Example, I'm in the pound USD right now. So what you see here is the pound USD chart on the 2 hour, of course, and what we're having is a pretty much bullish market right now. What I meant that most of people are missing out on, right? So pretty much everybody thought that after this break here, right, so price came in, created a high, right, created a low, and then created this high here, which never came above this previous high, and then people were already going bananas that this is, this is a short market structure. Look at the wicks, people are trying to force all sorts of confirmations in here to assure themselves that this market is bearish while in turn it's bullish, right? And then price comes in and takes out this low here, which is basically just a reaccumulation Wyckoff schematic, right? Now, why did I call this a reaccumulation Wyckoff schematic, right? So a reaccumulation Wyckoff schematic is that in which price tends to, for example, if you're in a bullish market, right, then price will break bearish and then instantly break back bullish and then continue bullish, right? This is what we call here an a Wyckoff reaccumulation schematic. So we have a break bearish to signify that this market is going to sell, and most of the people are already forcing these sells in here to take out this low. But what price does, right, is price makes this impulse, this sorry, we call these the tricky moves, right, or inducement moves, right? So price induces these traders to sell and then instantly buys off, taking out this high and then putting in another high, and then the trend continues, right? So this is basically a market maker schematic for, you know, building and taking liquidity over time. Now, that's precisely what happened over here, right? So, oops, okay, so let's put that back. Okay, so price comes in and takes out this low, putting in this new low here, right? But it's not a significant low. Why? Because the low that created this, I mean, the high that created this low here is pretty much this high. Now, check out what price does. So price comes in, right? Breaks the structure here, creates this low, and then instantly breaks back bullish again with a very strong momentum, right? So this is what, this is a Wyckoff reaccumulation schematic. And this was the total indication that we're in a context of a bullish market and we're likely to remain in that bullish market. So people in here already started to look for reasons to sell, right? While this market is very much bullish, right? So price came in, right? You can see these deep sells here, but price keeps running them off, right? So this is just liquidity being built and taken over time. However, we could just, you know, skip this whole charade here of bullish price action and just come to the most recent part of price, which is this area here. So like I said before, I'm in the pound USD chart on the 2-hour, and what we're seeing here is still, price is still showing us that the context of this price action is bullish, and it's more likely to remain bullish, right? Regardless other people's notions that this price is going down because of this and this and that and that. People always have a reason to buy or sell at any particular point within this chart, right? So regardless what they say, right, price does what it does best, which is create and take liquidity. So what we can see here is this this high here, which put in this low, and then we had this break of structure right here, put in this high here, and price after that comes down, you know, never completes its mitigation towards this area of demand here, but it's fine, right? So price changes its character, right? Creates this low here, comes in, right? Creates this internal mitigation right here, which is that confirmation that was needed to go bullish, and we did catch some bullish buys there, which was pretty much fantastic. And from there we created, price created this high here. And after the creation of this high here, so this is pretty much a what? It's a break of structure bullish, right? So we could just name this, right? We could just name this a break of structure, right? And from that break of structure, what are we left at, right? So we go back to our everyday rules, right? Our normal our daily bread, right? Which is SSC, right? Structure, SND, and confirm. So this is our daily bread. This is where all our money comes from. Okay, so from there we're left out with a pretty good demand zone right here, which is, you know, the original zone as well as the protected low. So this is a very strong area, right? So we expected some sort of reaction in here, and we got that. So price made its way back down, did that mitigation right there with this sweep of liquidity here and creation of this beautiful zone right here, right? So we could just take this area here, which is the last unmitigated part of price action, right? Or you could just use the, you know, the overall area, right? It just depends on your level of refinement, which is, you know, it's not judged, right? Everybody has their own basics. So from there, look at what price does, right? So price does what it does best. So price comes in, gives us this confirmation here of a change of character, which means that this right here was our Wyckoffian spring, and this right here was our Wyckoffian sign of strength. And we had that return to the order block down here to indicate that, you know, price has now swept off this liquidity here, this trendline liquidity here that was building in, sell side liquidity right here, which is pretty much fantastic. And below that we had some imbalances and a demand zone, and all of those have been mitigated. And after that mitigation, what's left is, you know, the entry part, right? So you could just take, you know, a risk entry module like that, but we don't do this at Green Pips FX Academy. We have our own styles of how to trade from areas like this, and of course you could use this high here as your next liquidity run area, right? So this is how markets move, right? And all this is not rocket science, guys, right? It's simply a prerogative that somebody builds when they have that level of knowledge, right? Because knowledge is everything. With that being said, guys, I hope you enjoyed the video. I hope you know, picked out a thing or two, and if you did, then, you know, don't forget to like, subscribe if you haven't, turn that bell button on for notifications, and until the next one, guys, stay safe Have a nice trading week and peace out.